Hello everyone, welcome to Meta-Luban. I'm Kervin. In today's video, we will be talking about what has happened with Bitcoin in this year. The year 2024 is destined to go down in crypto history. Bitcoin's market capitalization surpassed $1.9 trillion, ranking 7th among the world's most valuable assets and companies. Reflecting on this remarkable year, Bitcoin not only broke through several historic milestones, but also solidified its position in the capital markets and the minds of global investors. From the approval of spot ETFs and the policy benefits brought by Trump's re-election to the price crossing the $100,000 mark, 2024 saw Bitcoin transform from a hedge asset into a core global investment target. In 2024, Bitcoin saw an impressive annual gain of 180%, setting a new all-time high and sparking a frenzy in the capital markets. February was the strongest month of the year, with a monthly increase of 52%. Following Trump's victory in the November election, Bitcoin surged past the $100,000 mark, becoming the brightest star in the financial markets. Data analysts showing that since Trump's win, Bitcoin's price has risen nearly 60%. These significant events not only defined Bitcoin's highlight year in 2024, but also laid a solid foundation for future growth. Bitcoin's strong performance also drove a collective surge in cryptocurrency concept stocks. Looking at the performance of U.S. cryptocurrency concept stocks this year, major Bitcoin holder MicroStrategy saw its stock price soar over 520%, becoming the biggest winner in the cryptocurrency bull market. Bitcoin mining companies such as Terra rose by 213%. Bitdeer Technologies gained over 160%. Hut 8 surged over 100%, and Iron Limited increased by over 87%. Meanwhile, cryptocurrency exchange giant Coinbase saw its stock climb nearly 80%. MicroStrategy, with its bold Bitcoin reserve strategy, saw its stock price soar as Bitcoin skyrocketed. At the same time, Bitcoin spot ETFs also experienced a surge. As of November 30, 2024, 45 funds held 1,266,862 Bitcoins. And in less than a year, these ETFs accounted for 6% of the total Bitcoin supply, surpassing Satoshi Nakamoto's holdings. According to far-sighted investors, as of December 21st, 2024, the US Bitcoin spot ETFs have seen a net inflow of over $36 billion since their launch. It is worth noting that BlackRock's Bitcoin spot ETF surpassed the assets of its iShares Gold ETF in October this year, achieving this feat in just 10 months. For context, iShares Gold ETF was launched by BlackRock in January 2005. Looking at the broader investment landscape for the year, Bitcoin's strong performance in 2024 can be attributed to factors such as its fourth halving, which enhanced its scarcity, the influx of institutional funds, macroeconomic tailwinds, and the improving global policy environment. This strong performance has sparked greater investor expectations for the future. Why did the market surge significantly? There are three main driving factors. The first factor is the supply side Bitcoin halving effect. From the supply side, after a historical halving event, the cryptocurrency market typically begins a rally around 6 months later. The supply contraction effect brought on by the halving gradually become apparent, driving the market into a new upward cycle in the second half of 2024. This scarcity in supply further attracted institutional investors and long-term holders, providing strong upward momentum for the market. The second factor is the demand side, Trump's re-election and policy benefits. Trump's victory was seen as one of the biggest driving forces behind Bitcoin's price surge. Reflecting on U.S. President Trump's campaign statement, "I want Bitcoin to be mined, minted, and made in America," it sent a strong signal to global investors. The United States is determined to become the undisputed leader in Bitcoin mining. At the same time, most of his cabinet members were crypto-friendly, successfully building a crypto-friendly team, which greatly boosted market confidence. The regulatory process such as the upcoming FIT 21 and dams bills in the U.S. is helping Bitcoin and other crypto assets gradually move out of the gray area. These policy changes provide global investors with new asset allocation options and open up more robust long-term development possibilities for the digital currency industry. At the same time, the exploration of strategic Bitcoin reserves has played a crucial role in the market surge. Since the US election, the call for establishing a national strategic Bitcoin reserve has been growing, and it was also one of President Trump's campaign promises to be crypto-friendly. Several US states have started exploring the possibility of creating strategic Bitcoin reserves. For example, on December 12th, Texas proposed legislation to establish such a reserve by accepting Bitcoin as payment for taxes, fees, and donations, with plans to hold these Bitcoins for at least 5 years. This proposal could pave the way for a national-level strategic Bitcoin reserve program in the future. Other states are following suit. Additionally, the Federal Reserve's interest rate cuts and institutions' continuous accumulation of Bitcoin have also contributed to the price increase. The third point is the institutional participation, spot ETFs, and the Bitcoin accumulation craze. In 2024, besides the US, similar ETF products have been launched in regions like Europe, Canada, and Asia, with the investors in these regions also accelerating their investments. The increase in holdings by countries and institutions is undoubtedly the primary source of this demand. In addition to large-scale Bitcoin purchases by governments and institutions like BlackRock, Bitcoin hoarding is increasingly became a new trend in corporate asset allocation. MicroStrategy's Bitcoin strategy has sparked widespread imitation. According to data from Bitcoin Treasures, approximately 144 companies currently hold Bitcoin on their balance sheets. By the end of November 2024, publicly listed miners in North America had accumulated over 73,000 Bitcoins. A key catalyst is the shift in accounting standards. On November 16, 2024, the US FASB officially implemented new fair value accounting rules. These rules allow companies to report Bitcoin assets at their fair market value rather than historical cost. This change provides businesses with greater flexibility in asset classification and management, significantly reducing the risks of holding Bitcoin while offering regulatory support for more companies to adopt it. Regarding US Bitcoin ETFs, Standard Chartered observed through 13F filings submitted to the SEC that pension funds currently hold only 1% of the total shares across 9 newly approved Bitcoin ETFs. However, with the regulatory environment expected to ease under the Trump administration, traditional financial institutions are likely to find it much easier to invest in digital assets. If U.S. pension funds representing a colossal $40 trillion market allocate even a small portion of their assets to Bitcoin, it would undoubtedly have a significant impact on Bitcoin's price trajectory. 2024 is merely the beginning of the Bitcoin's bull market, and the upward momentum has only just started. If U.S. pension funds, global sovereign wealth funds, or potential U.S. strategic reserve fund accelerate their adoption of Bitcoin, it is entirely feasible for Bitcoin to reach around $200,000 by the end of 2025, marking the peak of this cycle. In the long run, Bitcoin not only has the potential to replace gold and the world's largest reserve asset, but will also gradually integrate into the diversified asset allocations of institutional investors, even becoming a crucial component of corporate financial strategies. This shift will fundamentally reshape the global financial landscape, establishing Bitcoin as the cornerstone of the new economic system. This bull market could be BTC's final mega cycle with massive growth potential. From a macro perspective, Bitcoin represents the third capitalized medium in human financial history. And at the meso level, it serves as the core index of the Web3 digital economy. On a micro scale, Bitcoin is gaining traction with global traditional capital amidst a wave of regulatory adoption, steadily integrating into a mainstream financial system. As Matrix Report noted, the success of 2024 lays the foundation for a strong start in 2025. For investors, this is not just a shining moment for Bitcoin, but also an unmissable capital feast. Many investors looking back at early 2024 regret not investing more aggressively. With BTC's last pioneering cycle behind us, are you ready to ride the next wave of Bitcoin? Just leave your comment below. I'm Kervin. See you next time.